So those who are saying that, okay, sir, I am doing major in marketing, so I have nothing to do with this international finance. Here is the answer. Even if you are doing marketing, so you must know that if I'm selling my goods to other country, how they're going to pay me and whether it is lucrative option that I sell you the goods, whether my company is going to be profited or not. Maybe you sell your product to the country, and what happened, its exchange rate go down and you receive less amount in your home remittance. We will talk about extensively in coming lectures what does it mean by sending goods to those countries, selling goods to those countries whose currency is going to be depreciated. So okay, so are we good understanding this environment and structure of the MNC? Right, Tiffany? So either whether we are exporting or whether we are importing, we are dealing with finances of two nations, currencies of two nations. Either we are managing our own business in other country, we are managing with two currencies. Or either we are investing in or financing in investing in other country, of course, we are dealing with the two currencies at least. Or either we asking loan from different countries, we are at least dealing with two currencies. So that's why this is how the international financial environment works. Let me silence this one. I don't know who's messaging me. Here we go. Now, the management style, up till now, what we have studied here, the company itself. Now the management. So you already, have studied decentralized management style and decentralized management style. So what is centralized management style means? It means all the decisions are coming from top. You cannot decide your own. You have to ask permissions or you have to wait from the answer from the top management. We call this centralized management style. So even if you want to buy goods, you want to import, or even you want to export, or even if you want to remit your cash to your subsidiary or to your head office, you need head office approval, right? So in this case, also international management, international financial management, it works as well. International financial transaction, it works. And in the case of decentralized, even then, the worth of international financial management still cannot be denied. Why? Even though the local manager or for example, the iPhone in China, he is responsible for acquiring, selling, and making of the iPhone itself, but it still need to answer to the head office. If the Apple Corporation China make profits, it need to send the profits to the American, their head office, which is in California. The Apple Corporation in US. So yuan going to be converted into dollars. So whether the management style is going to be decentralized or whether the management style is going to be centralized, the importance of international financial management cannot be denied. Any question up till now? EGA, Dayan, Stephanie? Understand? Okay. Clear. Okay, good. Let's move forward. So we will be right now talking about chapter 2. Chapter 1 is all about the, basing the introduction of MNCs and the management style. We just talk about that. It's a very fairly small chapter. So we talk about the importance of international financial management, international financial environment, and international financial transactions. So some of the, core chapter objectives we will discuss in this class, and the others we will be talking about in our next class. So we are starting chapter 2, international flow funds. So number 1, explain the key components of balance of payment. And then explain the growth in international trade activities over time. So we'll talk about that. Number 1, balance of payment. How flow of funds occurred in different countries. Number 1, what is balance of payment? It is a summary of transactions between domestic and foreign residents of a country over a specified period of time. So normally it is for 12 months. It can be 1 month, can be 1 day, can be 1 week as well, can be quarterly, can be semi-annually. So summary of transactions. Now, which kind of transactions? Number 1, all the transactions. So there are different types of transactions. So we categorize balance of payment into 2 accounts. Number 1, I think 3 accounts, right? 2 accounts, yes, 2 accounts, sorry. 2 accounts. Number 1, current account and capital account. So all the transactions that are occurring between foreign country and domestic country, they are recorded in these 2 accounts. Number 1, current account. What is current account? It summarizes all the flow funds due to purchase of goods or services or the provisions of income on financial assets. We'll talk about this. So remember, all the transactions related to buying and selling, which means importing and export, right? And provisions on income on financial assets. Or for example, if you invested in other countries, you receive dividend. Or if you buy bonds of other countries, you receive some kind of interest. These are in the current account. So normally, current account its life is less than 1 year, right? If asset life is less than 1 year, that funds are recorded in current account. So you are selling your goods and you expect it to be paid less than 1 year, right? If you are importing or if you are exporting, you need to pay and receive the money in less than 1 year. So that's why it is going to be recorded in current account. So capital account, in which the dealing is for more than 1 year. Let me change the color here. For example, you take a loan for more than 1 year. The company take a loan from even its head office or other, stock exchange or whatsoever for more than 1 year, all the summary of those flow funds is going to be recorded in capital account. Or if the company sells its assets, right? Or if a country sells its assets, it's going to be recorded in capital account. Like countries, they sold their airports, they sold their airline company, national airline company, national sui gas company, petroleum company, electricity company, right? So this is going to be under capital account, right? So we have a very nice short video to further clarify this concept. So please listen carefully. But first of all, can you hear the sound here?
Yes.
Okay, good. Yes. Let me play this.
The balance of trade is the difference between a country's imports and exports. A trade deficit occurs when a country buys or imports more goods from other countries than it sells or exports. The expenses going out of the country for imports is greater than the income coming in from exports. While a trade deficit could be an indication of less revenue being generated and hence resulting in a lower standard of living in the economy, it could also be a sign of economic expansion. When a country is going through an expansionary stage of its business cycle, aggregate income increases, which can trigger a rise in the demand for imported goods or services. A balance of trade deficit is favorable for domestic consumers as they enjoy a greater selection of goods and services at competing and lower prices. A trade surplus occurs when a country sells more than it buys from foreign markets. This means that the revenue coming into the country from exports is greater than the payments going out for imports. More revenue usually leads to a rise in employment and wages, which is prosperous for any economy. A surplus may also arise when an economy's business cycle is in a contracting stage. In this stage, aggregate income decreases, leading to a subsequent decline in the demand for imported goods. If exports remain unchanged, a surplus emerges. A balance of trade surplus is favorable for a country's domestic producers as they generate higher sales, more revenue, and increased profits. When combined into a single figure, an economy's trade transactions paint a useful picture of overall trade activity, helping investors identify trends.
Now let's discuss the balance of trade, which we just talked about here.
Sir, I have one question.
Stay on.
Yes, ma'am. It is the class. Is this the class material listed on the BB?
I cannot hear you properly. Can you type your question?
Okay.
It's too noisy. Okay, the rest of the class. So we talked about the balance of payment, and the balance of payment have two accounts, current account and capital account. So after this class,